Nikkei holding on to gains, while we're seeing Shanghai also managing to see some bit of a gain. The inaugural model in a series of urban-centric bikes to be developed by Royal Enfield.
Resistance comes in at 24,230, which is the 40 hourly exponential.
So there's a clear case over here for the companies to seek cash compensation from the government.
So 23,900 around is where the market is opening.
This doesn't worry us, but there has been a slowdown in India.
Pretty steady EBITDA margins between 23 and 25% over the last several years.
Still see the cautiousness, the caution which is prevailing in the market.
We're looking to acquire close to 21% stake in an NSE listed company called E2E Networks.
Revenue missed estimates by 11%, and that is because the order book tilted towards long cycle orders.
In the medium term, we want to look at a double-digit growth for sure.
Well, the broader end of the market continue to remain very volatile.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
And the bulls are seizing control of the market from the bears. What a remarkable recovery that we've seen in the markets in the last 1 hour. Hello and welcome. You're watching Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I am Rima, with me, Surbhi and Nigel. Hi, guys.
Hi, Rima. Maybe you're the lucky charm, right? Because we were missing you yesterday, and it was such an overbearing session with the market just moving down on fierce momentum. And today the picture's the absolute reverse. We started a little soft and quiet, and now it's a rollicking rally.
Taken off.
Yeah.
Well, and the important part is the Nifty bank. That's taken out those crucial levels. The 20, the 50 and the 100 DMA, all of them have got taken out. So the Nifty bank, that's leading the way in today's trading session. A couple of factors could have played out. Yesterday, Nimesh was telling us there's a large sellers, large FI sellers. So maybe a lot of that has got absorbed. That could be point number one. The FIs are net short on the index as well. That could be point number two. And in fact, some of these names had not corrected. The index had corrected 9%, but individual stocks had corrected 15, 20, 25% as well. So it's a big bounce. And on a lighter note, the bulls must be saying, Trump, ho or Harris, it's time to just cruise up. So that dip got bought into. I think for now, the reference point on the downside is around that 23,800 because we almost went there yesterday and we almost went there today. A fresh breakout will come in though once we get past the 24,450, 24,500 mark, because last week, every day we went to that mark and we couldn't conquer it.
Well, in the immediate term, at least yesterday's high, which is 24,300 approximately, that would be the first one to conquer. And then you said 24,450 to 500 where we faced resistance. But let's quickly run through some of the big movers that you can see at 230. So on the way up, it's been all about metals from the word go. So the top sectoral gainer is the metal index with names like JSW Steel, Hindalco, Tata Steel. Top three, pole position going to all the metal stocks, followed by Bajaj Auto, which is still recovering from yesterday's losses. Then banks, Axis Bank, HDFC Bank, State Bank of India, IndusInd Bank, all up anywhere between 2 to 3%. On the way down, Coal India, as we've been pointing out, ex-dividend, Adani Ports is a bit of cut. Trend, ITC, Bharti Airtel are down 1.5%.
I was looking at global markets ahead of this mega event that will start unfolding tonight. And actually, some of the Asian markets have had a very strong close as well. So Asia has done better than other parts of the world. That's the short point. Our neighbors, the Chinese markets, have had a very good run as well. Because remember, there's a lot of anticipation about more stimulus perhaps coming their way by the end of this week as that NPC meeting concludes as well. So most of the Asian markets have done well. By the way, Europe is trading with, a slight positive bias, but it's more flat than positive, you can say. US futures are indicating a positive start. Yesterday, we had a cautious session in the US. The indication is that the market will open positive, and then, of course, you take it from there depending on how the result situation plays out. So let's quickly kickstart the show and tell you about some of the strategies that you can perhaps work with. We, as usual, have with us Mitesh Thakkar joining in for the last 1 hour. Mitesh, what a move, right? So I'm guessing you would have been looking to close out those short trades, right? Because you were saying you need to be very nimble and run with very tight stop losses. And today it's been that kind of a market. So, but while you close the shorts, have you gone long as well? Are you convinced with this pullback, this bounce?
Yeah. So The shorting, I think, had to be closed around 24,050. We've done that. And we don't have an aggressive long position, but a minor long position, because I still believe that while, getting past 24,050 signals that this will be a pullback to pay out well. I'm not sure if a reversal is yet. So not long on the aggressive side, but yes, some position, some stocks which were not falling, stocks like HDFC Bank, Bank of Baroda, especially in financials. I think they were doing pretty well, and they were holding out nicely in a falling market. So there you can explore some longs. In fact, I have those stocks in my recognition as well. But coming to the index first, I think, getting past 24,050 means 24,250, and at 24,480 become the next two target area. So maybe we'll head towards 24,250 and 24,480 in the next 2 or 3 sessions. So in that sense, we are slightly positioned on the long side. Not aggressive, but yes, we have a long price. On the stock side, I just mentioned Bank of Baroda. I think that's a buy with a stop at about 252. Look for targets of 270 here. And HDFC Bank is a buy as well. Keep a stop just below 1730 and look for targets of 1810.
Okay, thank you very much for that. Lots of large mid caps, not a part of the index. So MRPL is up 10%. Vari Energies, which reports numbers today, new listing. The stock's been on a tear. It's up another 12.5%. Oil India makes it to the gainers list. Afcons, day 2 since it's been listed, that's higher by nearly 3%. Hudco is another stock up 4%, and pull up even something like a Mazgaon Docks post numbers, that stock is higher. But let's talk about Ola Electric, because that stock is at a 3-month low as the lock-in period expires today. As the 3-month lock-in expires today, the stock has tumbled 7.5%. Hormus joins in for more. Hormus.
Plenty of triggers to watch out for Ola Electric going forward, and this is one of them, that the 3-month lock-in period expired in today's trading session, and that means that almost 19 crore or 18.2 crore shares, or 4% of the outstanding equity, became eligible to trade. Now, it must be specified here that ending of the lock-in period does not mean that all of these shares will be sold in the market, but they just become eligible to be traded. So 4% of the outstanding equity for Ola Electric becomes eligible for trade today, and it became eligible to trade in September as well, when the 1-month lock-in had ended. Now, they also put out an exchange filing yesterday when they said that they are going to declare their second quarter results on the 8th of November, on Friday. And even in the first quarter, their losses had widened. Their EBITDA loss also remained flat at around 200 crore rupees. So that is something that you need to keep an eye out for Ola Electric as well. The stock is now back below its IPO price, courtesy of today's fall. It had made a post-listing high of almost 157. And from there, it has seen a very sharp correction, making an intraday low of around 74 rupees in today's session. So back below its IPO price for Ola Electric. There are plenty of other triggers to watch out for going forward as well.
Okay, all right. Thanks a lot for that, Hormus. Let's get in Deepak Shenoy, who joins us on the show. Hi, Deepak. Good afternoon. Good to see you. Well, the bulls are celebrating. We're at around 24,200 odd. A bit of a relief rally was due, and it's come about today. Any view on Ola Electric? The stock now is almost at the IPO price after nearly doubling in the initial part.
Yes, I think, Nigel, there's been I think this is a problem with these VC-funded companies, is that the VCs, the minute you list, they want to get their, their money out as soon as the lock-ins open. The lock-ins haven't completely opened. There's a bunch more that will come in after 6 months. So it's going to be another sequence of selling. And you will see this in pretty much all of them, whether it is First Cry, whether it was Delivery, whether it is Zomato also at that time. I think, once the VCs sell, the selling pressure is gone, that's when you kind of start to see, more fundamental driven moves in the stock. Till then, it's more dramatic. I wouldn't have expected a 7% fall, but it's falling on relatively small, numbers. And because possibly there are not enough buyers lined up, there is a lot of selling pressure. So to that extent, this may not be so much fundamentally driven then compared to being driven by the liquidity requirements of certain investors. But to be fair, I don't think the fundamentals have come to a point where I find it attractive either. So to both the fundamental and liquidity aspects are against it. We don't have any exposure, but we'll wait and watch if something comes up that makes it interesting.
Deepak, do you have exposure to ABB? The stock is recovered. It was down 5.5% post the numbers and the miss on the order inflows. But even in the conference call, the management sounded a bit cautious. They spoke about how the conversion of orders to revenue is taking some time. Even the order win quarterly run rate should be 2,500, 3,000. It will take some time for them to hit 4,000 in terms of a quarterly run rate. The stock is recovered, but still down 2.5%.
No, we don't track this, Rima, but I think this is a situation where a lot of people have mentioned this, a lot of companies have mentioned this on conference calls, that order inflows, order execution flows have been slower than expected. So we're looking at the capex sector and then saying a lot of this, because it's downstream capex, you're going to see a lot of the expected wins that were supposed to happen in the September quarter go to December or maybe even March. Plus, there is perhaps a lot of government spending that is yet to come. I don't think the government spending has moved up significantly as well. So that's also going to, in fact, downstream capex. Don't know about ABB specifically because we don't have a view on the stock right now. But I think we would have to wait for 2 or 3 quarters. Anyway, the stock is very richly valued. So I think at this point, any disappointment would take it down.
That's it's called on ABB. By the way, that's interesting news flashing on the screen, and this has been doing the rounds for a long time, right? Whether there will be some GST relief on insurance premiums or not. And what our sources are picking up is that at least on the term life insurance side, maybe some relief could be coming in. Obviously, this will have to go through the GST Council, so it sort of falls into several steps. But the early indication is that the GOM could be considering this, and the starting point could be life insurance, pure protection life insurance policies where you cover yourself and your family members as well. So term plans basically could be in the sort of running. What it does is obviously it reduces the actual cost of the product for the end consumer, and not so much of an implication for the P&L perhaps, but the sort of expectation would be that it would be passed on, so the policy becomes cheaper, the premium becomes lower for the end customer. Deepak, hi, great to have you on the show. So, let's get in your thoughts on life insurance. This would be an added sweetener, obviously. It will propel more people to perhaps buy pure term insurance. But I don't know if it really changes too much from a financial point of view, apart from maybe boosting penetration. Your thoughts, whether you like life insurance, and if yes, which stocks?
So I do like life insurance. I think we've got LIC in our portfolio, so there's that bias. One of the things about term insurance is you pay 18% GST on the term insurance premium itself. But if you buy one of these mixed investment / insurance ULIP kind of policies, you pay a lower GST on, I think, the first premium, second premium, that kind of thing. So there is a differential premium placed if you're buying term versus if you're buying something else. So I would say they should equalize that. Some of the elements of that GST may not necessarily translate to anything meaningful for customers per se, because for the insurance company per se, because a lot of the GST charge will just offset against input GST at a certain level. And if you notice recently, a lot of insurance companies are getting a lot of GST orders against them, and they're fighting those in court because of vagaries of whether when input GST was charged in 1 month versus another month. LIC recently got a 65 crore order against them. So there is a bunch of litigation that this kind of tends to offer. So it might generate some volumes on the term side, in terms of helping people pay at 20% less is obviously a good thing. But I would say term itself has not been that attractive for customers to buy. It's a very relatively small part of the insurance universe. So it tends to not be that much needle moving for most of the insurance companies, at least the listed ones. So I would say at this point, good for customers who like term insurance like me, but not so great for the industry overall because of relatively low penetration here.
Okay, all right. Deepak, I want your view on metals, but for the time being, I just want to pull up HDFC Bank. That one is willing to take leadership back. It's been a big underperformer. In today's trading session, you just look at that chart. It almost went to around the 20 and the 50 DMA, which was at around 1,690 and at around 1,700. It went to that mark today, and from there, it's seen a bit of a bounce. And we have seen this numerous times. Now, on the upside, you wanted to get past the previous high in this year itself, which is around 1,800 rupees. So keep an eye out on that. You have the reference point on the downside, 1680, 1690 to around that 1700 mark. You don't want it to break on the downside. But let's focus on the sector of the day. And we told you about this earlier today. This was the sector that I had highlighted even in my morning chat, that metals could be in focus. Why is that? Because China's national steel PMI number came out. It increased by 5.6 points, came in at around 54.6 for the month of October. Why is this important? Because the first time it moved into expansionary mode all the way since March 2023, which is positive for steel as well as for iron ore as well, because if steel is going to move up and higher production is going to come about, then iron ore as well will get support. The second factor at play is now the street is hopeful that maybe there could be some kind of protection for the domestic steel industry. I had spoken to JSW Steel as well, and they had mentioned this point, that they believe they got a very, very strong case. Because if you just look at what's happened in the past quarter, that's for quarter 2, the exports, well, they have come down by close to 28-29%, while imports have surged up by nearly around 43%. Those are the numbers up for you on the screen for the entire industry. And now the street believes that maybe the second half of the year is going to be far better. Why is that? Just going by what JSW Steel told us, they are the only big steel major to give their numbers. They said that steel prices have been hiked by around 1,000 to 2,000 rupees in the month of October on longs as well as flats. So that will help the selling price. And on the input side, coking coal costs have as just fallen by around $20 in the past quarter on a quarter-to-quarter basis. Now it's going to fall another $20 is what they believe in the coming quarter. So the spreads will increase, which will result in better profitability. And the second half of the year is normally better, in terms of demand, in terms of sales volume, operating leverage as well. So put all that together, we have the metals index that's doing quite well. Deepak, what's your view on the metal stocks? When I look at the metal sector, it's very, very tricky because there's so many factors at play. But a couple of metals which I'm tracking is the ferrochrome as well as on alumina. Both those two, there's a bit of a supply glut, but they are very, very niche in nature. You'll have to look at Infra, you have to look at a Nalco. But on the whole, how would you play this theme?
So, Nigel, I think what you just mentioned has two factors that kind of counter each other. Okay, so there's exactly the fact that China is recovering and then our steel imports will increase because of relatively perhaps lower prices abroad. And our steel manufacturers are trying to increase prices even though their input costs have come down. So they're trying to increase their margins at a time when imports are going up, which is no surprise. So at some point, if they go to the government is probably going to look at them and say, why aren't you reducing prices? Your margins are quite stable or even going up. So therefore, there is no need for protection for an industry that's trying to increase its profit margins, where the consumption of those goods is essentially what comes down to the cost, because the biggest cost is paid by the taxpayer in form of infrastructure increases and roads and ports and railways and all that. So you would expect that the steel companies would at least try to compete by keeping lower margins. So at some point, I think this is going to come back to bite them. And so therefore, I don't see this metal recovery lasting too much on the back, at least the steel recovery lasting too much on the back of that. The overall trend has been quite negative, and I believe it will be continuing. It will continue to do so, but regardless of worldwide geopolitics, I think the world economy is slowing. So to that extent, I would say maybe other than China, you're going to see a bit of a slowdown worldwide, which would bring worldwide prices of most metals commodities lower. So I'd say be careful at this point. It's more a technical play than a turnaround story. Though, I could be wrong. We don't have any real metals names in our fundamental list, mostly because they don't tend to be long-term secular stories on growth. So would not play it anyways in our portfolio. But I'd say this is not the best time for it.
Deepak, have you studied this new IPO, Sagility India, which provides tech solutions like revenue? Okay, you haven't.
No, I haven't.
That's the 2,000 crore IPO which is opened up today, and it provides tech services to the US healthcare ecosystems, insurance, hospital companies, so revenue cycle management, for instance, claims management, billing, etc. It provides all those tech services. What about Tilaknagar Industries? Is this a company that you track?
No, unfortunately not. It's not been in our list. I honestly,
Which alcohol company do you like, Deepak? I'm not talking about which. What do you like to sip on?
Stock.
Which stock do you like?
Well, we've got United Spirits, so it's a premiumization play. Really moved into. I mean, the ROEs of these companies used to be 3 or 4%. They've started to increase that substantially. Margins have slowly widened. I think it'll still take some time before it matures into a much more, much larger cash flow generation play. Right now, the cash flow is not all that great. But I would say longer term, this is perhaps the story in India. We're willing to pay, pretty much anything for coffee and alcohol. So at some point, I think that will play in our hands. But did you say no whiskeys or did you?
No, everything is allowed. For whatever you think, beer, whiskey, Tilak Nagar is selling brandy. 80-85% of their mix is brandy. And now they're selling some of that samsara and all, which personally I like it a lot, the pink gin. But
I think for a Tuesday afternoon, I think Naitul's getting a little colorful and carried away. Huh?
No, but I'm interested to see who takes Imperial Blue, because that's going to be an interesting bid. I believe that PEs have put in. We have been hearing about this in various reports as well. And it's an asset that's apparently worth 5,000 crores. So we'll have to see.
It's a large one.
That's a large one. And it's, I think, I don't want to go wrong on this, but I think it's the third largest selling whiskey in India.
Imperial Blue.
Yeah, Imperial Blue. So
let's see. Let's see if Tilak Nagar will be in the fray and the others as well. Just getting the conversation back to slightly more boring stuff like, defense and ships and war equipment. Mazgaon Dock came out with numbers, Deepak, and we know, right, the fierce debate has raged on whether the best is behind these stocks, not the companies, but the stocks. The execution was really good. Revenue up 50%. Profits have been surging. Stocks up as well. But again, that's the question. The story continues, but is the best of the stock run over?
Oh, that's a good question. We have owned this. We've recently only exited this in our portfolios. It's been a slow exit from the top, but one of the reasons was that I think there is a lot of optimism on the stock, and this number has played out. I mean, the quarter number has played out quite well, and they make a lot of money also through other income. One of the fundamental changes that's happened is the way this other income happens is because they get most of the money up front and they're able to keep that money in a deposit and earn some other income out of it while the ship is getting built over the time. But this is going to change to a point where their cash flows are not all at the beginning of the project, so that the other income component of it will come down a little bit over time. So we're seeing that from last quarter to this quarter, it is a little bit down, but I would say while the growth path is great for the longer term, I think, it's kind of reached where its price needs to be. The price is also corrected from the top, nearly 30% odd. So that is two of the reasons why we have said, okay, let's pause and take a look. We'll, of course, get back in if the story actually continues and gets stronger. But at this point, both the valuations and the price action don't justify us to kind of remain in this. I think the theme is great. It's just that the valuations are off. So maybe at another time, even at a price higher than this, if earnings continues to grow at this pace, we'd get back in. Very, very strong stock. Otherwise, on a fundamental basis.
Talking about valuations and themes that look good, you have any view on this solar cells, solar modules? Companies, you have Vare Energies that listed last week at around 2,400 rupees. And people are disappointed. They said it should have at least listed closer to 3,000 rupees. Currently, it's 3,400 rupees. So those that didn't get IPO allocated, but they went ahead and bought on the listing date, went down, I think, to around 2,300 rupees. Difficult to catch the bottom, but you still made money. Today, the stock is moving on very, very large volumes. I think there are three big companies there. One is Vare Energies, then you have Premier Energies, pull up that stock, and there's Insulation Energies. All three of them, they're into the modules, and now they're trying to backward integrate with regard to the cells. And all these stocks are doing very, very well. A word on this, Deepak, are they running too fast?
Well, this is, I think, a price action that seems to be before the fundamentals come in. Typically, I don't see any major fundamental change, but the long-term scope here again is absolutely fantastic. So they are very richly priced, 100 times earnings and, stuff like that. So we'll have to wait to see, at least Wari wise, how the performance is after their first, they haven't, I think, had a result announcement afterwards. So we usually wait for one or two result announcements to see how the business has changed post the IPO. But I think this again is a field which is basically energy independence, right? You're trying to move away from crude-based energy generation or coal-based energy generation at some point. So there will be a focus on that in India in the next few years. And that level of whether it is nuclear, hydrogen, or solar or wind for that matter, I think there is some of the biggest scale is in solar. Nuclear has scale, but it takes a lot of time and very few players. So we would see that some of these players will probably do really well. Vari in particular, I don't have a view on. We'll wait for 2 more quarters to see. But the price action is probably indicating something quite interesting, both this and Premier wise.
Okay, all right. Thanks a lot, Deepak, for that. And as you told, run us through the answer. It went up a couple of more percentage points. It's now up close to around 18%. But thanks, Deepak, for joining in. Wishing you a good afternoon ahead. Well, by the way, just take a look at these stocks. They're just flying away, Rima, and on very, very high volumes. Just a data point I want to point out with regard to my colleague Hormus is telling us, NMDC is going to be considering a bonus issue. Hormus tells us that the last time they did any kind of action with regard to a bonus, NMDC, was in 2008. And they did buybacks in 2016, 2019, as well as 2020. But now they're considering a bonus. The street likes that. So besides the Chinese news that's come in there, besides the better sales volumes numbers that we saw, and a couple of price increases, this is another booster shot, stock at the high point of the day.
Okay, thank you very much for that. And PSUs too continue to gain ground. MRPL, SJVN, look at that spike. SJVN, Hutco. SJVN was flat, now up 3%. Hutco too. Moving up quite smartly. Get into a break. We'll come back and chat with Varun Goyal from Mirae Asset Investment Managers on the other side. Stay tuned.
Your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
Welcome back. Here with us on Closing Bell, and the market recovery continues. It's been a good afternoon for the bulls after a long time. Varun Goyal, Senior Equity Fund Manager at Mirae Asset Investment Managers, is with us now to take the conversation forward. Varun, great to have you with us. Hope you had a good Diwali. The bulls are really hoping for a break, and at least this afternoon they've gotten one. What have you made of the market correction? I mean, index level, we're talking 8-9% lower. Individual stock level, it could be much deeper. Have you been deploying more cash? What is the cash position, first of all, within some of your schemes now? And have you been using the dip to buy, or are you still being a little cautious and being on the sidelines?
Good afternoon, Suvi. Diwali wishes and the New Year wishes to you and all the team and all the audience. I think the broader market correction that we have seen unfolding in the month of October is actually quite healthy. Valuations were running a little ahead of fundamentals. I think especially in some of the mid and the small cap space in sectors like PSU, defense, railways, some of the capital good names, I think it's a lot of froth is getting cleared up. As far as Nifty is concerned, if you look at the earnings, we ended with 1,000 rupees EPS for FY24, and for this year, our sense is we will end up with around 8% earnings growth, which is a slight scale down from what in the beginning of the year the expectations were around 10-12%. But overall, I think the larger earnings growth trajectory remains intact. For the next year, we expect 12-15% growth. So I think FY26, which is what market is discounting now, we are looking at around 1250 rupees earnings. And on that basis, market is trading at around 19 times 1 year forward, which is 5 to 10% more expensive than the historical average. But looking at how the interest rates trajectory is, looking at how the domestic flows are, I think we are broadly comfortable. So I think from a medium to long-term perspective, the market gives good opportunity for a healthy double-digit compounding. And we continue to be invested. As far as the cash position is concerned, as a policy, we never have too much cash. I think most funds running with low single-digit cash, and we have been, of course, deploying cash as the market has corrected.
But do you think there's more froth which needs to get corrected?
Well, there are individual pockets. As I mentioned, there were some sectors which were clearly running away ahead of fundamentals, and capex and infra as a theme has done particularly well in the last 3 years. I think that correction has been unfolding for the last 6 months. I think some more may happen. But I think broadly now we are in a regime where, if you go back 30 years, Nifty earnings have compounded at 10-12%. And if you would do good stock selection, you do good risk management, there is scope for healthy double-digit kind of compounding. And I think the markets will go back to prudent risk management, good stock picking. I think the important thing is we have to set our expectations right. Last 4 years, Nifty earnings grew at 18-20% CAGR. I think from now onwards, we are looking at more like low double-digit kind of earnings compounding, and therefore expectations need to be scaled down. But I think broadly still, a low double-digit return is also a very healthy return, and I know that's also something that investors should look forward to from a medium to long-term perspective.
Hi, Varun. Good afternoon. Good to see you. And Varun, if I'm not mistaken, Mirae has a Chinese fund as well?
Yeah, we do have global funds, but I'm not the best person to talk about those. So I look primarily at the domestic.
I just wanted to understand, how do you weigh the two? The problem is India was the only game in town till, say, around 2 months or so ago, because China kept faltering. Now, suddenly there is this talk that China from these bombed out levels can give us a challenge for the money flows. Wanted your comment on that?
I think, of course, across the world, there are several markets, economies, asset classes, which will continue to do well at different points of time. As far as I am concerned, as a domestic equity investor, I think we have seen phenomenal compounding that has played out in the last 10, 20, 30 years. And there is scope for a lot more. I see no reason why the next 10 years should not be as exciting as it has been in the past. And therefore, we continue to be very hopeful of the India story and continue to invest in the markets.
Got it. All right. Varun, let's talk about a sector that you liked. I think IT. That was a theme that we had spoken about, I think, the last time as well. And you all were fairly constructive on that space. Capgemini came out with some guidance, and, they came out with their numbers last week. And suddenly everyone got very nervous. But I think a closer look into it said there's not much correlation between the two. And that's why the tech stocks have bounced back. After this recent run, still very positive?
Yeah, I think there are clear signs of revival as far as demand is concerned, especially in the financial space and North American geography. I think that was the space which was worst impacted because of last year's mini crisis, where a lot of mid-sized US banks went through a lot of problems because of the significant increase in interest rates. I think as the interest rate trajectory starts reversing, and hopefully this week too, we should get another rate cut from US Fed. I think as that trajectory reverses, we expect the US financial space to get better. I think most Tier 1 Indian IT companies have almost 1/3 of their revenues coming from the North American BFSI space. And I think discretionary demand is gradually coming back. The only concern remains on the margin side. I think next 2 quarters, we should start seeing some improvement as far as the margin regime is concerned. So I think FY26 onwards, we should see a healthy double-digit compounding in earnings for most Tier 1 Indian IT names. And some of the mid-cap names can do even better. So we remain quite constructive on the IT space from this point onwards.
Varun, so I mean, when you're looking at incremental addition from here on, just give us a sense. There's still a debate going on domestic earnings and whether the consumer sector is slowing down, especially middle of the rung consumption or, the lower strata of consumption. And then there are the financials. I mean, today, look at the bank nifty. Financials are having a great run today. And that, I mean, no one's arguing the point that maybe there is a lot of valuation comfort in financials. But the issue is whether you will keep getting the growth runway and the margin improvement or not. So what is your stance on both of these pockets, consumer as well as financials?
I think as far as the lending financials, I think the worst is behind us. I think FY25 was a tough year because there were clearly pressure on NIMs. And if you look at the earnings growth for the Tier 1 banking space, this was a tough year with a single-digit growth because there were clearly pressure on margins. I think FY26 looks a lot better because we expect the credit growth to remain under control. We expect NIMs to bottom out and start reversing as the RBI starts cutting interest rates. I think we are also in a scenario where the credit growth has now converged with the deposit growth. So I think next year we would expect about 12-13% kind of credit growth. And therefore, I would be quite constructive on Tier 1 banking names, both public and private. And valuations, as you rightly mentioned, remains extremely attractive. So that's clearly overweight stance for us. As far as consumer space is concerned, there are clearly signs of some slowdown in the urban demand. I think some of the discretionary demand that we were seeing post-COVID is beginning to taper down, and therefore one needs to recalibrate the earnings growth as far as the urban discretionary consumption plays are concerned. As far as the rural plays are concerned, one hopes that with a fairly good monsoon, the demand is going to slowly start coming back. And in the next 2 quarters, we may see some recovery there. So on balance, I think one would be equal weightage kind of stance on the consumption space. But banking is clearly something which is very attractive. In fact, even the non-lending side, which is the asset capital marketplace, the AMCs, the depositories, exchanges, that is a very long-term, I think a 10-year story where as financial savings increase, more and more people put money in India in financial assets as compared to real assets or physical assets. And I think that thing should continue to do well. I think this quarter also we've seen very strong earnings growth on that side. And as long as we have a medium-term low inflation regime, which is a 3 to 5 year view of 4, 5, 6% kind of inflation, I think this financialization of savings should remain a fairly attractive story.
Is solar manufacturing a theme that you are interested in? You've analyzed. So we have manufacturers of solar panels, solar cells, etc.
Yeah, so I think this is clearly a sunrise industry as as we change from fossil fuels to more greener sources of energy. This is a space which is going to grow exponentially. One has to wait or one has to analyze what kind of companies have sturdy business models, what kind of companies have good clean management, which are able to look into the future and analyze and deploy the right technology. But clearly, along with some other new age sectors like EMS, contract manufacturing, this is definitely one space to watch out. I think we will see very fast earnings growth in this space, and it's something that one should keep on the radar from a medium to long term perspective.
But do you have exposure in your portfolio to any of these solar/EMS, the sunrise industries that you spoke about?
Yeah, we do have some exposure.
You do have. To both of them, to both the themes?
Yes.
Okay. Thank you, Varun, for joining in. Let's move on now and talk about D Street Chatter. Nimesh is now joining in with an insight into what's happening in the dealing rooms. Nimesh, the bull has been let loose.
Yeah, absolutely. Rima, again, yesterday there was no reason for such a sharp fall, and today also there doesn't seem to be a big reason for a very sharp pullback. It looks like it's a recovery from extremely oversold levels. The FIs are still net sellers. Of course, the selling intensity has lowered. I spoke about that yesterday as well, that there is not a large selling for such a fall yesterday. Equally, there is no big selling, but there are still better sellers, is what I understand. So the ratio is close to 1:2 on the sell side. Again, November is going to have very large binary events to track, right? The first, of course, is the US election outcome that will come tomorrow, and that will be a huge impact across all markets and India as well. So that's something to track. The other big thing to watch from a flow perspective is the MSCI, which is preponed this time to 7th and not in 14. So even that will have a big impact as far as inflows are concerned. And the net inflows are going to be more than $2 billion. But of course, the big chunk would be to HDFC Bank. And I guess that's also a reason why we're seeing a big recovery in the Nifty Bank today, thanks to a bit of recovery in HDFC Bank as well. PSU banks have seen a bit of buying interest back. So again, the SBI results will be very critical to watch out for. But in general, there is a buying interest in PSU bank stocks. That's the overall feedback. And I guess metals are rallying a bit of a dead cat bounce. And of course, there is an anticipation of a large stimulus as well, maybe end of this week. So there are a lot of factors to watch out for and to play. But looks like today's pullback is purely a pullback from extremely oversold levels, and the FIs continue to be net sellers.
Okay, got that. Yeah, I mean, it's a completely remarkable turnaround, and let's just see, the bulls will hope this lasts. What about individual level stock action, Nimesh? What's the buzz today?
Well, the first stock is IDFC First Bank. It's still, the stock stands out for me because of the kind of bid interest which is there from large institutions. So there are some large block bids which are in the system from larger FIs in IDFC First Bank. So that's the reason you've seen a bit of a recovery as well intraday in that particular name. The second stock is Genesis. It's came into my charter list last week as well. There was a large block. Some AIF bought as well in that block deal. And now I understand the company is likely to raise funds via pref or a QIP very soon. So that's the second stock. The third stock is EPAC Durables. That's been buzzing in the last couple of days, been locked at 5% upper circuit even in today's market. The company has done some large deals as well in the last few weeks. But at these levels now, after a big rally, I'm hearing some bit of profit booking or some bit of selling from some domestic AIFs in EPAC Solutions. So that's the third name. And the last is GMR Airports. That's been under pressure for the last couple of days, purely on back of sell flow. So it looks like a large leading FI is an aggressive seller. And even today, there are sell flows on the sell side. So clearly, there is delivery-based selling happening in GMR Reports in the last couple of days, and that's been the case today as well.
Thank you very much for that. Get into a break. But before that, CNBC-TV18 is celebrating 25 years of excellence, and we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policy makers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You don't want to miss this.
Welcome back. Well, the markets are really surging. We're holding with a gain of more than 200 points. Who would have thought midway through the trading session? And the metal index actually is doing very, very well. And if in case there is going to be some kind of move to protect the steel industry, a few of these companies will be on the radar because NMDC Steel, that's the company, the street has been waiting whether or not the, government is going to go ahead and sell this particular entity. If there's going to be some protection that's come in there, it's going to make their, work much easier. So that could be a stock actually that you should track. It went all the way to around 60 rupees, came down to around 45 rupees or thereabouts. But we'll have to wait by to see whether or not there is some protection, because then it helps them with regard to divestment of some of these assets. Like you have an RINL, you have an NMDC Steel as well, which could be many takers if there is protection that's coming in there. So metal index is at the high point of the day. But I think a couple of these smaller counters is something that you'll have to track. Will RINL get folded up into some of those PSUs? Will NMDC Steel finally get sold into? Well, those are questions that will be answered once we see some kind of action coming in from the government of India. But Mitesh Thakkar is back with us. Mitesh, what's your view? Hold on to the long position if you've taken one? Or do you think take some money off the table? Two big events coming up, rather book some profit and stay light ahead of it?
See, my sense is that I think, some longs can be taken because this looks like a good bounce back. The rebound is very strong. I was talking about 24,250. We've hit, we're nearly hitting those levels, but I think 24,485 zone could be tested as well. So we'll take some BTST call, especially as you were highlighting the metals pack. It looks interesting to me because that's where the rebound is the most strongest. The hourly charts are looking the best. So BTST on JSW Steel can be taken with the stop at 989 for targets of 1,020. And the other one, which I like, is Tata Steel, BTST with the stop at 150 for targets of 156.
Okay, thank you very much for that. Now let's talk about Niva Bupa. Now, the 2,200 crore IPO was announced yesterday. But how is this playing out on Star Health Insurance? Yash is here with a quick analysis. Yash.
Well, Rima, it's quite an interesting comparison between the two companies. Star Health, before the market recovered, of course, the stock was down much more intraday. And put 2 days together, yesterday and today, the stock was down almost 10%. And a large part of this has to come from the announcement which came from Niva Bupa. That was its 2,200 crore IPO. The reason being that now investors have another insurance company in the standalone health insurance space to play the Indian health insurance market, and that impacted the stock to a large extent. As far as the valuations are concerned between Niva Bupa and Star Health Insurance, Niva Bupa brings a very interesting comparison. The pre-money valuation as far as Niva Bupa is concerned, that comes to about 6.14 times, but the interesting part comes in when we look at the post-money valuation. As far as the total book value post-money is concerned, that is about 2,700 crore rupees nearly. With that, the valuation that comes is at about 4.72 times price to book value. Star Health Insurance trades at exactly the same valuation, that is 4.73 times. Now, here between the two companies, Star is a much larger player, but the growth rate with Niva Bupa is much higher than the company that is Star Health Insurance, as well as the standalone health insurance industry. If you just look at the growth rate in FY23, Niva Bupa grew its net earned premium at 52% versus Star Health at 18%, standalone health insurance industry at 26%. First quarter of FY25, Niva Bupa's growth in the net earned premium was 37% versus Star at about 18% and standalone health insurance industry at 25%. The drawback right now is that it's a much smaller base for Niva Bupa to grow on. That is the only thing that one needs to keep in mind. But the growth rate has been very strong. And interestingly, what adds to that is the valuation post-money between Niva Bupa's IPO and Star Health is right now neck to neck. And that's what has been playing out on the stock as far as Star Health Insurance is concerned.
Thank you very much for that. And now let's talk about Gland Pharma. That's a stock which is surging in trade. Vinny joins in to tell us more about how the quarter shaped and what the outlook is going forward. Yeah, so Gland Pharma is one of the stocks that are among the top gainers in the Nifty 500. Numbers, when you look at it, it was an inline set of numbers, not much of an excitement there on an overall basis. The core market growth was impacted by the US business, which didn't see as much as a pickup that one was expecting, as well as the rest of the world business also didn't see much of a pickup. They've lowered their FY25 growth guidance to low double-digit growth from previous mid-teens growth that they were watching out for. Revenue saw a growth of around 2.5%, margins contracted a bit, while profits of the company also saw a decline of 15%. So what is, leading to the stock run-up that we're seeing now in terms of the outlook that the company gave? And the company spoke about Senexi. When you look at the business ex-Senexi, margins have given a very strong positive surprise, and the company has guided a EBITDA break-even for Senexi by Q4 FY25, and they're expecting further improvements in this business. So from here on, we could start seeing that positive sign coming in for the business. Overall, also they're saying positive EBITDA by FY26 is what they're expecting for this business, and they have mainly driven by the revenues for the company. So going forward, positive outlook is what they've given, which is keeping the stock abuzz today. And this is despite that we saw a lot of brokerages downgrading the stock this morning. Despite that, such a strong run-up for the stock.
Okay, all right. Thanks a lot for that, Vinny. Well, time to slip into a short break. On the other side, we'll have Jay Bala from cashthekiosk.com, who joins us to help us out with how he's approaching markets. Welcome back. The markets have bounced back, but we have one cautious voice that joins us on a Tuesday and tells us that lower levels are coming about. So let's get Jay Bala back on the show. Hi, Jay. Good afternoon. Good to see you, Bin. This is a dead cat bounce, I'm assuming, according to you, and it's a good shorting opportunity. Am I right?
That's right, Nigel. See, I had pointed out the support as 23,890 to 23,800. The markets are bouncing from 23,810 that it registered yesterday. So the markets are still looking weak. Barring today, the bounces have been quite weak. And the problem for the bulls is that Reliance is holding below 1433. Before this pre-split, a few weeks back, I had mentioned that Reliance should not trade under 2600. The post-split price, that's it's trading below 1300, and it did trade below 1300. That's not a good sign for Reliance. It's probably likely to clock underperformance over the next several weeks. But the bounce for Reliance is likely to hold below 1433 and most probably below 1380. That's a negative for the market. The resistance for Nifty comes at about 24,700 and 25,300. At the yesterday's support, which I projected a couple of weeks back, if that were given, the next support comes at about 23,680. And if 23,680 were to break, 23,089, I'm still anticipating later on, probably a few weeks down the line, the June 4th low to get registered for the market.
Okay, so that thesis of going down to 21,300 is still very much intact. What about banks? The recovery in banks, 1,000-point up move on Nifty Bank appears to be solid, backed by a lot of these large caps moving up. How would you read that?
Yeah, banks are rallying in a counter-trend fashion, and I anticipate probably post the Fed announcement or SBI results, the banks take lead in the next leg of the move. In fact, today I have a conditional short on SBI. If SBI were to break below 807, then one should place a stop at about 840. It's a conditional short. Don't pre up the market. Wait for it to break below 807. Then the price objective will turn out to about 736. And I anticipate some bounce to take place for the banking index. Probably face resistance at about 52,475 on the banking index. Maybe on a stretch to 52,950. That's the max I'm seeing for the banking index. So this is still a counter-trend rally, and the banking index is deceiving and probably lulling people into complacency.
Alchem?
Yeah, Alchem is one of the weakest stock, Nigel, and it's because there's an event risk ahead. This is the only short, and you got to be trading this light. 5,900 stock. I'm anticipating a decline to about 52.44. Further downsides to work with for Alchem. And if you see today's F&O data, there's a short build-up there.
What's the overall global setup looking like? We've got an event risk, 2 event risks lined up in front of us.
Yeah, in the extreme short term, I'm anticipating a bounce to come through probably just today. And then post the results or just on the results day, I'm anticipating a sharp decline to come through for the equity markets. That is a small case that the high that registered for the NASDAQ in July is probably a long-term high. When I say long-term, it's probably long-term from 2003 to 2024. So, but still, since it's I'm projecting a trend of such large degree, I'll wait for further confirmation to come through. Probably, I want NVIDIA to start trading below 110. Once that happens, probably we'll have further clues for the markets to come through. But the point is, be cautious. As I pointed out on the 15th of October, I wanted the US markets to turn around the 21st of October. The turn has exactly come through from the 21st of October for the Dow Jones. So, and it's looking, the short term is looking shaky. I'm anticipating some bounce to come through for the Dow Jones to about 42,800 max, and then take a sharp dip below that. And if it closes below 40,000, it confirms a significant reversal for the industrials.
Okay, all right. Final question, Jay, before we let you go. Levels on the dollar index, crude, as well as the 10-year yield. Where are they headed? Very quickly.
Yeah, I'm anticipating pullback to come through for the 10-year yields as well as the dollar index. So I expect the US 10-year yields to hold above 410 to 390. But the main message from the US bond markets, or in fact, the global bond markets, is that if you are living in a thinking that disinflation is taking place, the bond markets are sending a message that you are living in an illusion. And the levels for crude is, the Brent is, I'm anticipating a break below the September low. But in very short term, there's a bounce to come through. And when it comes to precious metals, I'm anticipating silver has possibly taken a turn for the medium term for the confirmation to come through. But gold, once again, I'm anticipating a corrective decline to somewhere close to about, say, 2,600 and change, and the silver to decline to somewhere about 28 and change.
Okay, thank you very much for that. By the way, just counting down, and it's been a remarkable recovery for the markets. We're ending closer to 24,200. The final tick may be slightly lower, but 200 points up on the Nifty. The sensex surging 600 points. Banks leading the way with a 900-point gain by the close of trade. Metals had a field day, 3% higher on the metal index. And in individual large-cap gainers, you had JSW Steel, Tata Steel, Bajaj Auto, Hindalco, HDFC Bank, Axis Bank, Grasim and State Bank of India.
Well, a lot of stocks, though, moving around on the downside as well. You had Adani Ports that was down. ITC was a little under the weather, and Trent as well did see some bit of selling in today's trading session. From the broader markets, we had Torrent Power, Amara Raja. They as well were down. JK Cement as well was lower in trade. While on the flip side, Oil India bounced up well. Jubilant Food as well was spotting in trade. And Manappuram Finance, it seems to be finding some kind of support at around the 145, 150 odd mark. Bigger gainers, Gland Pharma. That was a stock that was up and about in today's trading session. Add to the list, Tilak Nagar Industries reacting to its numbers up 15%. And this entire solar theme is gaining traction. Vari Energies was up. You had Premier Energies that was up. So both those two did very, very well. And also Shankara, another stock that's been a rank underperformer. But in today's trading session, post its con call, it appears the commentary was quite positive. So that stock went home with gains of close to around 10% in today's trading session. On that note, though, we'll wrap up on this edition of Closing Bell. It's been a good one to the bulls. But I'll tell you what, stay with us. Markets Forward comes up next.